Hello all, Tony here. Well, after another action-packed week, we saw US equity markets close lower, weighed down by the uncertainty from the conflict in the Middle East, surging energy prices, and fading hopes of Fed rate cuts. While this week marks a busy calendar for central bank meetings with no less than 7 scheduled, including the Federal Reserve and the Reserve Bank of Australia, headlines out of the Middle East are set to dominate proceedings once again. Let's take a look at the charts of the NASDAQ and the Dow Jones to see how they are lining up at the start of this new week. Okay, and not a lot has changed for the NASDAQ, really. We still see the NASDAQ as being in part of a correction, which began back here in late October, confirmed by the double top, which formed in late January. And really, since then, it has just been continuing to trade sideways in a range between broadly, let's say, 24,300 and this resistance level coming up here around 25,400. So I'm talking about this range through here, which of course is occurring within a larger range defined by this high here and this low here. Now, what we can see is a continuing ability for the NASDAQ to hold above this 200-day moving average, which is currently coming in around 24,200 and about 84-ish. So good signs in the idea that it is holding above a very important support level, which is being reinforced by this low you can see down here at 23,854 from the end of November. And our view has been that while it holds above these two support levels, it's in a good situation or a good place to bounce from, but we really need to see it get above this horizontal resistance coming in around, let's say, 25,400. If the NASDAQ can do that, then it opens up a retest of this double top around 26,200-ish and potentially sets up a move towards 27,000. Now, if, on the other hand, it was to break below this 200-day moving average and below this low from the end of November, it would be a negative development, creating technical damage, which likely sees a pullback towards 23,000, which comes from these levels over here through the end of 2025, midway through 2025. The Dow Jones is perhaps more interesting because it's certainly been breaking out of ranges over the past 3 or 4 weeks. And when we look at the Dow Jones, you can see that it did form or trace out a potential head and shoulders topping pattern. Here's the left shoulder, here's the head, and here's the right shoulder. And we did flag this in our reports over the past couple of weeks, warning that if the Dow Jones break below this neckline on a sustained basis, coming in around 48,400 to 48,500, it would signify that the Dow Jones was taking a deeper pullback towards the projection for the head and shoulders top. Now, to work out the projection from the head and shoulders top, it is quite simply the difference between this high and the neckline, which was roughly 2,000 points. So you project that 2,000 points down from 48,500-ish, and you're coming into this support area here, 46,500, and it almost hit it to the T on Friday night. Good signs there as well, because that played out very nicely. But not only that, it's held above the 200-day moving average, coming in around 46,461. Now, whereas the NASDAQ has been in a range, this has created some technical damage. And what we really need to see for the Dow Jones is for it to continue to hold above this 200-day moving average and to start to bounce back up to negate some of this technical damage. What you need to be mindful of, and one level we are watching very importantly, is this orange line, because if it were to see a sustained break below here, then I think what it does is open up a deeper retracement back towards support, initially around 45,500-ish, coming from this area here, a little bit of support over here at 45,700-ish, but this 45,000 area is such a big level. And I guess what that would give us is a nice 5,500 point pullback for the Dow Jones. It's not my base case, but even if it were to come back to this area, I'd still see it as being a correction playing out rather than anything sinister, just because of the rally that we saw unfold from those Liberation Day lows from 36,000 up towards 50,000. That's all for this update. Stay tuned for more ahead.